This is a review of our trading the April gold on Friday, February the 17th for most of the trading session throughout the morning. Gold oscillated between support and resistance that we had mapped on our screen. And my approach is to wait for these areas to be violated in one direction or another, and then try to enter in that direction, which means that at this point, for example, at about 9:30 Eastern, the market started to break to the downside and then returned back into the area of significance, this being today about 1732 and a half. When it did that, and we look for specific things that we talk about during the course of the day in the trading room, but it did unfold to meet our criteria for getting short, which we did 2 contracts with the idea of taking one off at our first target, which was about at 28. So getting short in here at about 32 and a half, 33, taking the first contract off at around 28. Our target for the trade was down here at 24, which we did get to, and pretty quickly and directly. In this gold once it did break out of this trading range. And that's one of the things that I really like about this trade is that after a period of consolidation, it's almost like compressing a spring. Once it goes, and if you can manage to get in the right side of that move when it does go, it goes pretty quick and pretty direct. And in this case, right to our objective. So we had just the one trade for the day, and that was this one. It did generate a profit for the day trading the gold. And so for a pre-holiday session, not bad. I trade it the same way every day. I look at these same type of trades every day in these 3 markets as we go through them throughout the day, the euro, the gold, and the S&P 500. And when they line up in just this way, we find this very similar result. So again, just another example is that if we wait through these areas where you can really get chopped away, that we're well served.